European earnings season kicks off in earnest. Welcome to Market Insight. I'm Ramzan Karamali. Well, a slew of corporate results kept investors on their toes today. Lloyds Banking Group and Barratt among those with positive news, while cosmetic giant L'Oreal firmly in the negative column as China dented its quarterly sales. Well, to help look at those results in more detail, I'm joined by Zoe Gillespie, investment manager at RBC Brewin Dolphin. Zoe, thanks so much for joining us. Well, let's start with Lloyds. Q3 results were ahead of forecasts, but do you think they'll be able to maintain this performance when the interest rate easing path picks up steam?
Yeah, as you say, the results come in better than expected, but there was a slight dip compared to last year. And I think the big takeaway was the effects of the fall in net interest income. So I think you're right. It's whether or not we're going to see similar declines coming through. I think the one thing that I would highlight is, though, that we see more positivity coming through from the mortgage market. And certainly, if we start seeing kind of a more confidence, I think, in the interest rate direction and more, I think, availability for some people, then that certainly might have a better read through. But certainly, it seems to be the trend that profitability's dipped, but as you say, it did come in better than expected in terms of numbers.
And on Thursday, we hear from their rival Barclays. Do you think the focus there will be more on their investment banking activity? And what are you expecting in general from them?
Yeah, I think we're expecting, again, the focus to be there. If you looked at the Q2 numbers, that was where the strength came from. And certainly that helped to offset the net interest income. I think they're forecast of a slight dip in profit. But again, I think the numbers certainly probably all eyes will be on the investment banking division. Barclays is a really strong year in terms of its share price. It's up 50% since the start of the year. Although in the last couple of weeks, I think we've seen that stall. So I think tomorrow will be a bit of an indication of what's coming. And I think for both also, whether the budget's going to have an impact on consumer confidence overall and whether we're going to see any tax hikes coming through for any of the banks.
Well, one firm that's obviously going to be looking forward to lower interest rates in the near future is Barratt. It sounded very positive about its prospects and confident about cost savings too. Why do you think that is?
Well, I think they've obviously merged both businesses, and they've, as you say, they've indicated that they're going to have cost savings of 90 million. And I think a lot of that's going to be sort of closures of offices and trying to have some cost by merging the two businesses. And certainly from that perspective, it should be a positive for numbers. I think the one thing they've also indicated is that they intend to build more homes. At the moment, they're predicted to build about 17,000 this year. They're looking in this medium term to build 22,000. So certainly the combined business is more ambitious in terms of targets. I think the other thing that was quite good today was the number of reservations has gone up. Certainly there's a 37% increase from this time last year. So as you say, more confidence in the housing market and lower interest rates certainly seems to be reading through in the near term as well.
Well, let's keep with some of the positive stories then. And it's the world's second biggest brewer, Heineken. Its Q3 sales beat forecasts, but that was partly on the back of more demand for non-alcoholic beer. Is this something the firm can rely on going forward?
Yeah, it seems to be quite a similar trend. As you say, their non-alcoholic beer and cider ranges rose 11%, which I think against the industry backdrop is actually quite a high increase. And I think it certainly offsets slower sales in the likes of America and in Mexico. Brazilian business was good. And I think in Europe, there is the more traditional beers were impacted by the bad weather. So the sporting events, which normally lead to better consumption of alcohol, the weather had impacted that. So I think the one takeaway was the increased demand for the non-alcoholic ranges. But I think certainly profit guidance has really been unaltered, and they're anticipating it's going to come in between about 4 and 8%. So overall, no real change and a positive story, as you say, for the share price today.
But on the negative side of things is L'Oreal. Overnight, it reported sales were up, but they were quite a lot below expectations. Is this all down to China and the Chinese consumer not feeling very confident?
I think that was one of the biggest takeaways from it. As you say, sales guidance came in at 3.4%. I think they're anticipating 6% guidance. And I think certainly the second quarter, we have seen a decline. And as you say, China was expected to have a modest positive, however, actually purported a decline in sales. And I think we're seeing this a lot across the kind of consumer divisions and a lot of the luxury spend, that the weakness in the Chinese market has impacted overall in sales. I think the trend for the US helped offset some of the negative sentiment here. But I think the CEO highlighted that they're hoping that the stimulus packages that have been announced may bring the consumer back. But at the moment, it's been a difficult time for L'Oreal. And certainly we've seen quite a lot of weakness this year. And today the share price is off over 4%, so more bad news.
Zoe Gillespie from RBC Brewin Dolphin, many thanks for your thoughts. And that's Market Insights. Don't forget you can watch more videos on Reuters.com.